Welcome back to Codex. Today's speaker is Mihai Cucuringu from UCLA. Professor Cucuringu is an expert in mathematical and statistical finance. Today he'll talk about signed and directed graph clustering and financial time series. Take it away, Mihai.
Okay, thank you very much, guys, for the invitation. It's good to be connected with people I haven't seen in a while. So the title says I'm going to be talking about a few graph-based ML techniques and their applications to finance. I understand that maybe the audience is not so much into finance, but I'll try to keep some of the applications to the minimum and maybe discuss them in a bit more detail toward the end of the talk if there's time. So as the talk will be structured as follows. We'll give a brief overview of several graph clustering techniques for families of graphs that have been relatively well understudied in the recent literature, in particular signed and directed graph clustering. If I have a bit of time, I'll discuss a bit about ranking and group synchronization and how this can also be applied to some financial applications. And at the very end, I'll just show very briefly some applications to this problem in finance, or more broadly in multivariate time series data, of detecting leaders and laggards. So just a quick recap on what do we mean by clustering. So in the standard setting of graph clustering, we're given a graph G, and typically we have associated positive edge weights Wij, typically constructed via some sort of kernel of choice. So Xi, J can encode time series, images, text, whatever. And the goal here is to partition V into clusters such that the intercluster edges have high weight and the intercluster edges have low weight. And this problem has tons of applications across several fields. And you can see here kind of an example of how the scrambled graph look like and how does it look like as we separate the clusters. So here on the right-hand side, these are adjacency matrices from standard stochastic block models, and I'll cover them in a bit more detail later on. But the idea here is in standard stochastic block models is that we have some high edge density within the clusters that we see on the block diagonals, lower edge density across the clusters, and basically the cluster structure arises because we have this difference in edge densities. However, in what I'm going to be discussing today, unlike standard graph clustering settings, that we don't require that this intra-cluster edge probability to be different from those of the inter-cluster edges, but rather this will be implicitly achieved by the sign or the directionality of the edges, and in the case of synchronization, the signals sitting at the nodes. So one fundamental concept in graph clustering is that of a graph cut, where we define the cut between two sets A and B to be just the sum of the edge weights that span the two subsets. And cut is a fundamental concept in graph clustering, and the goal is how can we partition the graph into A and B such that in order to minimize the resulting cuts. So this is very standard. So the go-to techniques for graph clustering has probably been spectral clustering, which has been around since early 2000 by Shin Malik, where the idea is that let's embed the node set into RK and then perform k-means clustering. And typically, this embedding is given by the extremal eigenvectors of some suitably defined graph matrix, for example, like a graph Laplacian. So in standard setting, you have this minimizing the summation of cuts, penalized by the volume because you want to stay away from trivially small clusters. As usually, this problem is NP hardened in the worst case, and we relax the discreteness constraints, and the solution is given by the smallest k eigenvectors of this normalized graph Laplacian. And one thing that will be useful later on is to keep in mind that if X is the cluster indicator vector, then quadratic forms in the graph Laplacian, the standard LET minus A graph Laplacian, this just simply counts the total edge weights leaving the cluster. So this is all very standard. So one of the problems that I've been interested in for quite some time, motivated by financial applications, is that of clustering sign graphs. So there are a lot of applications where the edge weights can also take negative edges, maybe encoding some sort of dissimilarity information or friends, enemies. And one reasonable goal to optimize is that maybe you want to maximize the sum of the weights of the intra-cluster positive edges. They should live within the cluster to keep them happy, plus the inter-cluster negative edges. They should live across clusters to also keep them happy. So in the case of k equal to 2, this can also be seen as an instance of the so-called group synchronization problem over Z2. So here the problem is as follows. We have a bunch of group elements, plus minus 1, sitting at the nodes of the graph. And the edge captures the ratio of the endpoints. In this case, in Z2 element, its own inverse. So basically, in the noiseless setting, the edge captures the product of the endpoints. So if there's no noise, then it's very easy to come up with a solution to this problem. We just fix a root node, we propagate along some spanning tree, and we get a solution. And we always have a degree of freedom here because you can always flip all the signs of the elements sitting at the nodes, and you can gonna get the solution. So we always have this 1 degree of freedom that you have to mod out. So now the problem gets harder when you have noise. So here, noise means some of the edge weights are flipped, right? The plus, minus one becomes one, and one becomes minus one. So in the setting here, the problem is, given information on the edges, how can we recover the group elements sitting at the nodes of the graph in order to maximize the number of happy edges? So, for example, if you give me this plus one here, but I give you a solution where this is a minus one, this is a plus one, then this edge here is unhappy because it's not satisfied. So the goal here is how can we come up with a solution in order to maximize the number of happy edges. So it's not too difficult to see that this can be written as this kind of intra-cluster happiness. You can write it as a maximization of a quadratic form. It always happens in the settings where you have these binary constraints. This is NP hard, and the relaxation simply gives us an eigenvalue problem that we can easily solve and to extract the solution from the sign of the entries into this leading eigenvector. And alternatively, which will get me to this notion of a sign Laplacian, if you formulate this synchronization problem as a least square problem by minimizing this unhappy edges, then with a bit of algebra, you can see this quadratic form here. It's minimizing the so-called graph Laplacian, this x transpose L bar x, where this sign Laplacian L bar is defined as d bar minus a, where this d bar is a diagonal matrix with the row sums as the degrees. So there's been quite a bit of literature in clustering the eigenembedding of various sign Laplacians, but this was before it came into the picture some years ago. This was done without any mathematical guarantees. So our approach here was as follows: we borrow some intuition from some this so-called constraint clustering problem in machine learning, where in constraint clustering you try to cluster a similarity matrix given some side information that in the form of must link and cannot link constraints. So the idea that we followed here is that we decompose our graph into the positive or negative subgraph, and then we minimize two measures of badness. So if you look at the positive subgraph, so all the subgraph of the positive edges, you want to minimize the cut because positive edges, if they lie in the cut, they're unhappy. If you look at the negative subgraph, you want to maximize because negative edges in the cut are happy, and then we try to minimize this two measures of badness. And at first, it seems a bit ad hoc, but we do so by essentially merging the numerators and the denominators with some trade-off parameters tau plus and tau minus to get to minimize this ratio of cuts here. And with a bit of algebra and defining the right normalized indicator vector, you can write this discrete optimization problem as a summation of ratios of quadratic forms, where the underlying matrix here is just L plus L minus that denotes the Laplacian of the positive and negative subgraph, and D plus D minus are just diagonal matrices where you have the degrees on the diagonal. So with a few more assumptions and the appropriate change of variables, we can essentially solve. It's not quite a relaxation, to be fully honest, but it leads to a suitable eigenvalue problem that we can solve. So at the end of the day, we solve an eigenvalue problem that's essentially a higher order quadratic form. That's this trace of y transpose this ugly looking matrix T times y, which can be solved either via spectral or SDP relaxation. So the algo we proposed some time ago for this was this algorithm here, where we split the graph into G plus G minus. We construct this essentially shifted Laplacian matrices, L plus L minus, and then we find the smallest k generalized eigenvectors of this matrix pencil here that to give us the embedding, and then we run k-means plus plus in this eigenembedding to get back to recover the solution. And then, as always, you always have the option to consider symmetrized version of the graph Laplacian. This should be shown to be particularly useful when you have like a skew degree distribution for the nodes. And I should also say that in the experiments here, we use something that's called lob PCG. It's a preconditioned eigensolver for solving large plots of some definite matrices. So the idea here is that using this preconditioned solvers from the kind of Laplacian paradigm literature, the Spielmann-Tang, essentially they're able to solve linear system Lx equals to b in almost linear time in the number of non-zero entries in the matrix L, and this essentially allows us to, because these matrices here are strongly diagonal dominant, we can essentially solve this what would otherwise be order n square generalized eigenvalue problem in almost linear time in the number of non-zero entries in the matrix L minus, because these are sparse. So if we want to go in the direction of proving some mathematical guarantees, we need a block model. So I'm going to show today some what could be natural extensions of this SBM model to the sign case and also to the directed setting. So in the sign case, story goes as follows: you have a pair of nodes. So let's say you generate a graph GMP. We want to partition into k equally sized clusters. And then if you have an edge that is in the same cluster, you assign a +1, and different cluster is -1. And then you flip the sign of the edge with some probability eta. So if I and j were to lie in the same cluster, then the mixture model will look something like that with some probability 1 minus p, the edge is missing, probability p, it's existing, and if it's existing, it's either correct, if it's in the same cluster means +1, or noisy, it's a -1, it's in a different cluster. But when I and j, they live in different clusters, then you switch the sign. So what we're able to do is to give some performance guarantees for this sponge algorithm that I mentioned in the previous slide, for higher than, for number of clusters k that initially 2, but you can extend it to a larger number of clusters, which depend on the sampling sparsity p and the noise level eta. So this would be in a toy example how the cluster membership matrix would look like that we try to recover. And this is how this SBM instance would look like in the case where you have, let's say the edge density here is 1, the graph is complete. So you just have a bunch of +1s on the diagonal, -1 on the off-diagonal blocks. And then as you start adding more noise, eta here, the noise level that you flip a coin and you toss a coin and you flip the sign of the edge weight, then the cluster becomes less and less clear. So in terms of robustness guarantees, so recall we had this ugly-looking matrix T that was essentially a function of the data, and just involving L plus, L minus, D plus, D minus, and then if we denote this T bar, kind of the expected counterpart of this matrix, and let's say for simplicity, we focus on the case of just 2 clusters. The first n minus half nodes are +1, the remaining n minus half are -1, just to encode the 2 clusters. And let's say V2T, V2T bar are the smallest eigenvectors of T and T bar. Then what we can show is that the range space of these 2 matrices of V2T is close to the range space of V2T bar, provided N and P are large enough. So the way this goes, we first derive some concentration bounds for L plus, L minus, D plus, D minus, is 4 matrices, and this all together will lead to a bound on the spectral norm of T minus T bar. So how close T that we have available to matches the unknown T bar. And then this in turn allows us to get a bound on the eigenspace misalignment using Davis-Cahan theorem. And this, one assumption that needs standard here in order for its concentration bounds to hold is that we need P to be above log n over n. And then in later work, we've extended this to the sparse setting where P is on the order of theta 1 over n. So if we look at some of the numerical experiments, how our proposed methods compare to the state of the art, we compare this across the varying number of clusters. P here is the edge density in the problem, and the y-axis is the adjusted rand index. So the higher, the better. So 1 means we're able to do perfect cluster recovery, and 0 complete garbage. So you can see in these 2 examples, when we vary the noise level from 0 to in increasing noise levels, then our proposed method, they tend to dominate the other methods from the literature, including the methods based on the sign Laplacian or directly based on the eigenmethod of the adjacency matrix. And then these are some other techniques from the literature that I didn't cover. And then the gap between our methods and the competitors is even quite a bit higher when you increase k. So you make the problem harder. Harder here means you increase k to 20 or 50 clusters. And in this example, we fix eta, the noise level, and then we vary the edge probability p. Right, and we can see there are some regimes where our proposed methods do quite well, while some of the other methods are completely struggling to recover any meaningful cluster structure. Just to say a little bit about regradation in the sparse regime. So we had some follow-up work where we were able to handle this case of P's on the order of theta 1 over n. So typically in the regradation literature, there's 2 ways how this is done. On one hand, there's this technique that shifts the diagonal matrix by scalar times identity prior to forming the graph Laplacian matrix. So that's one way. The other way, by Joseph and Binu, the way they did it for unsigned graphs, they just took the adjacency matrix and they shifted it by tau times the all ones matrix. So we kind of borrowed the same intuition here, where we separately regularized A plus, A minus. So we have our initial graph A, we split it into A plus, A minus, we regularize each one, and then we construct, based on this regularized Laplace matrices, adjacency matrices A plus, A minus, we construct the resulting Laplacian matrices, and are able to show that indeed for suitably chosen regression parameter, we do better. So here, this is just showing the adjusted rand index as a function of our gamma minus gamma plus regression parameters. And yeah, indeed, this shows that we are able to do better than existing methods in this very sparse regime, P is 1 over theta. So just to give a few examples on where is this useful in financial settings. So for example, we took a bunch of financial data, in particular the S&P 500 time series. We looked at daily data, and then we did this sign Laplacian clustering in the trying to extract 10 sectors because there's like 10 sectors in the U.S. economy, and we're trying to understand how well this aligns. So you can the way to read this this plot here is that the rows are different sectors in the economy, while the columns are our different clusterizations. And we can observe here that some clusters indeed capture very well some of the sectors. And on the other hand, some of the sectors are captured very well by some clusters, but it's not necessarily the case that all the clusters and all the fundamental driven sectors are aligned. And in terms of using this for certain type of statistical arbitrage portfolio construction, so more broadly, stat arb is this area in finance where you're trying to exploit the correlation breakdown in pairs of assets. So the typical example here is you look at Pepsi and Coke, and they have been historically correlated. And due to some whatever unusual market conditions, this correlation breaks down. And you technically model the spread between Pepsi and Coke as a mean reverting OU process, and you place a trade whenever you see that this residual has departed significantly from zero. So we've in the standard startup setting, we plugged in our sign clustering technique, and we essentially played the same startup game, but at the cluster level. So the intuition here is that if you have assets that co-move together, they've been clustered, and they are more likely to co-move together, then it's more likely to see that whenever you have deviations from the cluster average, then you're more likely to get more profitable trading strategies. So the idea here is that once you build a cluster, you construct like a cluster average where you weight all the assets in the cluster, and you consider the spread between each of the stocks involved in the cluster and the cluster average. So whenever you see large deviations from the cluster mean, then it means you have a large residual that you're trying to construct the trading signal around it. So if we were to look at some of our methods, the sponge techniques compared to some standard spectral clustering or some of this Laplacian-based clustering, or we're getting better results across a number of financial metrics. So here, one elephant in the room is how do you choose the size of the dimension of the embedding or the number of clusters? And we've compared here like a fixed number of clusters or the standard techniques of capturing some X% of the variance. Or we've also used techniques from random matrix theory, in particular this Marchenko-Pasov distribution that governs the asymptotics of random covariance matrices, and we use it as a tool to inform to delimit the informative part of the spectrum from the uninformative part. And if we were to look at the profit and loss of this resulting trading strategies, indeed that we make a case here that our proposed techniques leads to a strategy that have higher P&L returns. And another example of how we can leverage this sign clustering technique is for portfolio construction. So there's been this line of work of Kai-Ting Wang and his group at Columbia a couple of years ago, where essentially they cluster assets, and then they construct a market, set up a Markowitz problem, where from every cluster they pick up the asset with the lowest volatility. And once they do so, then they just do standard Markowitz optimization on this much reduced universe. And of course, idea here is how do you construct your clusters? And again, in this setting here, when we compare our proposed sponge clustering techniques versus some other standard techniques from the literature, indeed we get better results both in terms of Sharpe ratio. So Sharpe ratio is think of it's probably the most important finance metric that simply measures the average of your daily profit and loss divided by standard deviation, annualized times square root of 252. That's how many trading days are in a year. So this is kind of a risk-adjusted performance metric that people care about, and we are dominating some of the other methods, both in terms of Sharpe ratios and also in P&L return in basis points per day. Okay, so this was kind of what I wanted to say about this problem of sign clustering, is how we can apply it to certain types of financial problems. The other sort of interesting family of networks that have an application in finance are directed graphs. So there's a number of reasons why directed graphs are important. So there's a lot of interactions out there are not symmetric. I lead points to J doesn't necessarily imply J points to I. Now this could encode maybe causal relationships, interbank depth networks, paper citation, and so on. And this direction naturally can capture some information transmission or temporal ordering. And a lot of the time, if we just ignore directionality, this leads to loss of signals and biased inference. So the main idea I want to convey here is that when we deal with time series data, especially in the multivariate setting, we would like to exploit some sort of cross-series dependencies to improve a prediction task. But the problem here is that there are many ways how you can construct pairwise relationships. Now, I'll show a few examples of how can you construct a directed graph from time series data. But the problem is that some of these pairwise relationships are very noisy. Right? For example, I points to J is typically very noisy at the individual level. So what we're trying to do here is how can we extrapolate from these very noisy pairwise edges to some sort of higher order structure that will allow us to improve our prediction tasks. So in particular, the higher order structure here will be communities. Okay, and if the question here is, what's the analog of a graph cut in this directed graph setting? So if you go back to this previous example that I shown earlier, right? Remember, this is in the standard setting. The cut is just the sum of the edge weights that of the edges that live in the cut, right? But for directed cuts, it's not so clear. As I'll mention a bit later, typically the go-to technique for people in the literature is to symmetrize the adjacency matrix, make it symmetric, and then use some standard techniques from the sign clustering literature to recover the clusters. So instead, what we propose to do in a series of works is let's try to come up with a different idea of a clusterization. In particular, let's try to extract clusters such that when we look at the pairwise flow of edges between pairs of clusters, there exists a high imbalance. So in this example here, if I were to look the cut between A and B, it's just all the edges that flow from left to right, and then the cut from B to A, it's all the edges that flow from B to A, right? So if I were to look at the cut imbalance ratio between A and B, I would get something like this here. So I want to say that 80% of the edges flow from A to B and 20% the other way around. So if we're able to uncover this sort of underlying cluster structure, then we are in business, because a lot of the time, as in the examples I'll show later, this can be exploited. This type of imbalance in the flow of information can be exploited for some prediction task. So the very first time I started working on this, one of the motivations was transactions of financial network. So in the example here, it's just two clusters, right? But imagine you can extract this, you can extend this to multiple clusters, right? So the idea here is that let's say you have a network and you have flow of most of the edges flow, most of the money in the system flows along the green edges. Maybe this could be some sort of criminal organization that wires money from the bottom up to all the way to the head of the network. But maybe they want to confuse authorities. Maybe they will wire money against the main flow. So in some sense, you can think that you have a directed network, which can be large, but there is some underlying meta graph such that the clusters you can find correspond to these meta nodes, and most of the edges flow according to the meta to the edges in this underlying meta graph. Right? So I can cluster this graph here into A, B, C, D, such that the underlying meta graph here is just a path. Yeah. And typically, the kind of underlying meta graph that has some structure in terms of this flow, this imbalance, is typically planted in a much larger graph. And the goal here is, given the directed graph, how can we extract this underlying subgraph? And some of the challenges that you deal with directed graph is that the usual normalized cut values I mentioned earlier fails to uncover many of the underlying patterns. So it's really the case that the asymmetric relationships contain some essential information about the graph. And the naive symmetrization of the adjacency matrix that people typically do throws away some of this information. So one example I like to give when I talk about directed graphs is this migration network, where that counts migration in the US between counties in the US over a 5-year period. So if you do naive symmetrization here, then the standard spectral clustering will just give you clusters that align with the political boundaries, which perhaps is not surprising, right? Because it's more, you'd expect that there's a lot more intrastate migration than a cross-state migration. While if you use some of our proposed techniques, so this Hermitian clustering technique that I'll introduce in the next few slides, the idea is that you get a bunch of clusters, but then if you were to zoom into the strongest pairs of clusters, which is the red and green, you can ignore the yellow as a kind of ambient graph. If you just look at the red and green, it happens that most of the flow here is from green to red and very little the other way around, which kind of makes also sense, right? A lot of people from these areas have been migrated north, and you even see some red dots south tip of Florida, kind of rich people retiring in Florida. So that's kind of the structural information that we want to get. So the algo, this first algo that we came up with a few years ago, and I'm going to talk a bit about an extension to this that appeared at AI Stats this month. So in the initial setting, what we did is we constructed a complex valued Hermitian matrix by just computing the skew, making the input matrix skew-symmetric. We do this by looking at M minus M transpose, and we multiply it entry-wise by iota, and this Hermitian matrix has real eigenvalues. And what we could show is that whenever the direction of the edges induces a certain cluster structure in G, and this structure is roughly encoded in the eigenvectors associated with the top eigenvalues of A. All right, and so in some sense, this Hermitian clustering algo can be seen to uncover higher order structure between the clusters. And then again, if you want to give some sort of theoretical guarantees, you need a stochastic block model, and kind of the directed analog of this is perhaps what you'd expect, especially if you think in terms of this underlying meta graph that governs the flow of information. So let's say we have k clusters; they could be potentially of different sizes. You have an edge probability between two vertices in the same cluster to be p. You have q to be the edge probability between two nodes in different clusters. And the catch here is that we want to recover clusters even when p equals to q, because if p is not equal to q, you can simply throw away the directions on the edges, and you can still cluster by using standard spectral clustering just because you have the difference in edge density. But in this case here, we have this underlying matrix F that controls orientation of the edges between pairs of clusters. So this, this F is a k by k matrix for k clusters such that FLJ plus FJ equals to 1. So in an ideal noiseless setting, it's the case that one of these edges is 1, or the other one of these values is 1, the other one is 0, kind of encodes what's the edge in the meta graph. But in practice, we won't see this sort of setting, right? It could be the case that maybe 90% of the edges flow from cluster A to cluster J and only 10% the other way around. Yeah, so you can think of this F matrix to be the adjacency matrix of a meta graph that describes the relationship between the clusters. So just to give a concrete example, so if you have this meta graph matrix here, F to be like this, then that is to say that on the diagonal we always have a 0.5 for simplicity, meaning that there's no orientation, no structure within the cluster. You just have random orientation. But if I were to look at the flow between cluster 1 and cluster 2 and cluster 1, it's 75% of the edges flow from 1 to 2 and 25% the other way around. So in some sense, I have 25% noise in the setting, and the underlying meta graph here is a C3. It's a cycle. So this example is particularly cooked up such that in expectation, all the vertices of G have the same in and out degree. So it's not like you can cheat and construct features and then do some simple clusterization based on the features. So the algo is quite simple. If in the unweighted setting, it's just plus minus iota depending which way the edge points. And then you get the eigenvalues, eigenvectors. Your embedding is given by the real and complex concatenating eigenvectors of this matrix. And the sort of results we can show here are very similar in spirit to what I mentioned earlier for the sine case. So under certain assumptions on N and P, then we can get an upper bound on the number of misclassified vertices. So essentially, we're doing weak clustering here, not strong clustering recovery, but weak recovery in the sense that the misclustering rate, kind of the fraction of nodes with cluster assignment we get wrong, which is the misclustering rate, this goes to 0, then goes to infinity. And we've customized this for different types of underlying metagraph structure, like maybe a cycle metagraph or a complete metagraph. And just like in the standard setting, you can also have different type of normalization for these Hermitian matrices, like you typically do for the graph Laplacians. But the idea is always the same. You have the kind of bulk of the eigenvalues capturing noise, and then you have a few eigenvalues popping outside of the same historical law, and we want to take the eigenvectors corresponding to those eigenvalues to give us the embedding. So now, one critic I always had against this method is that it's not so much interpretable in the sense that this spectral method that I described doesn't necessarily correspond to an explicit optimization problem. So we don't have an objective function that we optimize. Yeah. So what we did in some very recent work is that we found an MLE approach for this DSBM model. So the communities here were purely given by edge directionality, and we recovered the planted communities via maximum likelihood estimation. So particularly, we focused on the setting of two clusters, just source and destination, where you could have P, the edge density within the source. P is also edge density within the destination, and you have Q, the edge density between the two. And then you have this also eta parameter that controls the noise in the orientation. So if eta is 0, it means 100% of the edges flow from C1 to C2 from source to destination. Right? Right? And the idea here is that we like to recover the two clusters and get some recovery rates as a function as MPQ. Right, and what we first show is that the MLE on the community labels, this is equivalent to this optimization problem that I'm showing here. So it looks very similar to the kind of a quadratic form that we discussed earlier, but here H, the Hermitian matrix H, doesn't only capture this net flow, A minus H transpose of kind of the skew symmetric matrix that captures net flow between pairs of nodes, but also has a term that captures the total amount of this kind of symmetrized version, total number of edges between pairs of clusters. So this is because of this binary discreteness constraint. This is NP hard, so we relax it, computing the top eigenvector of this matrix H. So essentially, this MLE objective we can show to be equivalent by the net flow, like with some weighted net flow. So this is just the flow from C1 to C2 minus the other way around. Minus again some weighted total flow between the two clusters. And we do a similar type of perturbation analysis. In the ideal case, you recover the cluster structure from the top eigenvector of expected value of H. But you're applying similar techniques like Davis-Cahan perturbation bounds and Wells inequality, we can get an upper bound on the misalignment between these eigenspaces, and then in turn, this will allow us to get a handle on the spectral norm between H and expected value of H, and then again using standard techniques from clustering using K-means plus, because it has the 1 plus epsilon approximation guarantee, then we can get an upper bound on the misclustering error, similar like we've gotten before for spectral clustering. So the number of misclustering, misclustered nodes as a function of n goes to infinity as goes to 0, then goes to infinity. And then we also consider spectral relaxation, and we also consider the SDP relaxation, so the some definite programming relaxation. But for this one, we do not give any theoretical guarantees. So this one has the advantage that you can enforce some extra constraints in this SDP program. And then if you were to look at the concrete example, this is how the embedding would look like for the spectral relaxation and for the SDP relaxation. And then if we were to compare this MLE-based technique to some of the previous methods, then indeed we're getting much better recovery rates as a function when we look at the usual adjusted rand index for different values of P and Q. And here on the x-axis we have eta, which is the noise level. Yeah, so the eta 0, we're getting pretty close to 1, and we are able to dominate some of the other methods. So a bit related to this problem of clustering digraphs is this idea of how can we rank for pairwise comparison data. So this problem is similar in the sense that this typically you have a bunch of players that play games against each other, and we're given a subset of noisy pairwise measurements of the form Ri minus Rj. So this type of measurements are typically encoded can be encoded as a directed graph. Right, and of course, when the graph is connected and you don't have any noise, it's very simple to recover a solution. Just find the spanning tree and you propagate, and you always have a degree of freedom. So you can think of this problem here as an instance of the group synchronization problem, where the underlying group is a real line. Okay, so we had a JMLR paper a couple of years ago where for this model here, where we have available noisy measurements of Ri minus Rj. We propose like an SVD-based technique to recover the true ranking. So it's not too difficult to see that under some probabilistic, this Erdős-Renyi outlier noise model, where you either see the exact measurement R minus Rj, or you see a noisy version of it. In expectation, this matrix here is a rank 2 matrix. So you can do your usual trick where the measurement matrix is a random perturbation, is a low rank perturbation of a random matrix, and then you can recover the solution, your R, and the ranking induced by the leading singular vectors of this matrix C. But this was not particularly robust to outliers. So what we also did was to look at synchronization over SO2, that maybe some of you here are already familiar with this problem, and try to adapt this to get a ranking algo. And then I'll show an example where this really allowed us to get some interesting insights when we looked at financial data. So just as remind what the problem is here. So this synchronization over SO2 is the problem of recovering n unknown angles, let's say group elements in SO2, given a small subset of noisy pairwise offsets. So we're given this delta ij, theta minus theta j mod 2 pi, and we're given delta and we're trying to recover the thetas. But of course, in practice, we just don't have the exact measurement, but we measure noise, right? So the problem is, how can we recover the thetas given this very small subset of this very noisy pairwise relationship? And this has been proposed in the literature around 2010, 2011 by Singer et al., where it proposed an angular embedding. So you take your measurements deltas, you do an angular embedding, you maximize an objective function of this form that essentially bumps up the objective function whenever we have a good alignment. So think of in terms of similar perspective of maximizing happiness in the system, right? If you give me an angle difference and I give you a solution that is close to that measurement, that edge is more or less happy. So it's not too difficult to see that you can maximize happiness in the system by maximizing this quadratic form here, involving this H matrix, this angular matrix, and we recover the solution from the leading eigenvector of this matrix. So this holds true because you can think of the measurement matrix if you had all the n choose 2 measurements, that this is just a rank 1 outer product, right? And if you don't have too much noise, you'll always have this leading eigenvalue popping outside of the semicircle law, and then you can recover the angles from the corresponding eigenvector of this largest matrix. So what we did in some skip over this. So what we did in some work related to ranking was, how can we apply group synchronization over SO2 to come up with a more robust ranking algo? So the idea here is that we start with the CIJ. These are think of them as noisy outputs of a pairwise comparison. We find some transformation to map them into angle offsets. Once we get angle offsets, we can compute this angular embedding. And this sort of problem we know how to solve. We recover the solution from the leading eigenvector of this Hermitian matrix here. And then the idea here is that we kind of rid off the rankings going from 0 to 360. But of course, here we have 1 degree of freedom that we have to mod out, right? Because this is up to a global rotation, right? So maybe here, if you don't have rotation, Chelsea is best, Tottenham is second best, and then Sunderland is last. But if you when you recover the solution, you'll get it up to a global rotation. So if you were to read the same ranking, you'll say that Liverpool is first, Arsenal is second, and then Manchester is last. So you need the next post-processing step here to mod out the best circular permutation. And when I first proposed it some time ago, did not provide any theoretical guarantees, but there was a paper I think last year that gave theoretical guarantees for this sync rank algo. And the reason I'm mentioning this, because we've reused this more recently in a financial setting. So the idea here is that in finance, when you can think of this pairwise directed matrix as the outcome of matches, right? And once you are in that mindset, you can find a one-dimensional ranking of the players, right? That ranks the players from strongest to weakest, with the objective that you want to minimize upsets. So for example, if Manchester beats Barcelona in the direct match, but in the final ranking, Manchester is ranked lower than Barcelona, that's an upset. So in ranking, the problem is, given all these pairwise comparisons, how can we come up with a one-dimensional ordering of the items that minimizes the upsets? So once we are in this setting of ranking, you can extract you can find a one-dimensional ordering of your items. And you can leverage this for some prediction tasks. So, for example, if you're dealing with time series data, you can potentially build the trading strategies by looking at your leaders today, looking at the average values of your leaders today, like see what the stock price did today, and try to back out the forecast for that for what the laggers will do tomorrow. Yeah, so that's kind of the motivation for why we wanted to look at this lead lag information. So what this like sync rank algo allowed us to do is apply it to some financial data. And then if you were to look at you were to undo the synchronization, look at the residual matrix. If you look at this residual matrix and you try to squint at it from far away, you kind of see 3 clusters here, right? So here blue means low residual error, and yellow here means high error. So in some sense, what this is saying that we were not able to find a single one-dimensional ranking of all the stocks in the S&P 500, but rather we were able to find 3 clusters such that within each cluster, we can rank while creating a few subsets, which kind of makes sense intuitively because it's quite unlikely that you're going to find leaders and followers globally for the whole stock market. Most likely, you're going to find pockets of stocks such that, or clusters such that within each clusters, you can rank while creating very few subsets. So in some sense, it's as if you have multiple clusters. Whenever you have angle measurements or players play within the same cluster, you have some noise level, and whenever you have players play across different clusters, you have another noise level which is much higher. Okay, so this is kind of what I call the cluster synchronization problem, where you're trying to recover these two separate clusters such that you have a lot less noise when you have measurements within the same clusters, but a lot more noise when you have measurements between different clusters. And also related to this problem, which also has application in recommender systems, we looked at this problem of bisynchronization, where instead of having a single family of angles, theta 1 to theta n, let's say you have two families. You have the alpha angles and the beta angles, and then whenever you look at the measurement graph, you have an angle difference. It's coming from one of the two worlds, either the alpha angles or the beta angles. But when you pick up an edge, let's say you don't know which world is it coming from. So in some sense, if you were to look at the measurement graph, you can think that there's some disjoint decomposition of this into the red subgraph measurement graph and the blue measurement graph, right? Such that whenever we have an edge here in the red graph, it means we have a measurement between alpha and alpha j. And whenever you have this edge here between bi and b1 and b3, we have a measurement between beta 1 minus beta 3 plus noise. And this could it could happen that in sports competition, for example, you have maybe different jury members rating different players. And there's essentially these two underlying sets of angles or rankings that you try to recover. And kind of the extension here goes what you would expect. You have this mixture model where you have probabilities of having good edges in the alpha angles or good edges in the beta angles, or you have some underlying bad graph that your measurement is completely garbage. And the trick is the same if you're looking at this H matrix and expectation. It would be a rank 2 matrix, but the single measurement matrix that we observe is a random perturbation of a low rank matrix. And the idea is as you'd expect, you recover this k sets of angles, like k equal to 2 in the previous example I gave, from the leading eigenvectors of this Hermitian matrix H. And again, what we could show here, at least in the case of 3 angles, is that if this graph measurement density is large enough, above log n over n, we can get an upper bound on the correlation between we can lower bound the correlation between our proposed solution and the ground truth solution. And so maybe in the last few minutes, I want to say a bit more about this application of the ranking and digraph clustering in financial time series. So there's a lot of systems out there that describe multiple quantities that are thought to exhibit lead-lag relationships. So first of all, what do we actually mean by lead-lag? So it could be the case that, for example, one definition could be that we say that time series A leads time series B if A's past values are more strongly associated with B's future values than A's future values are with B's past values. So it's a bit of a mouthful, but you get the idea. For example, you can think that the return of stock I on day t could influence the behavior of stock J on day t plus 3. So and then in which case we say that I leads J by 3 units of time. And there could be many reasons why this lead-lag relationship arises. It could be the case that genuinely one time series has a delayed response to the other. Maybe if it's like a supply chain relationship and some event happens, disruption in the source, and then this will affect the destination. Or it could be the case that they have a delayed response to some common factor that affects both time series. So factor models are very prominent in finance, and it could be the case that different stocks that they have different exposures at different lag values to these factors, and this kind of induces that you have a lot of pairwise lead lag at the stock level. But you can imagine these pairwise comparisons are super noisy. It could be the case that I leads J by 3 units of time, J leads K by 2 units of time, but I doesn't necessarily leave K by 5 units of time, right? So we have a lot of these inconsistencies, and this gives us, it's a good opportunity to try to do denoising and do ranking or do clustering to recover the clusters. And the most naive thing you can do here is, okay, if I use some clustering algo, can be something as simple as row sum, counting victories in matches, right? Or something as sophisticated as the sync rank that you go through this angular synchronization machinery over SO2. At the end of the day, you're going to get a one-dimensional ordering from leaders to followers. And as I mentioned earlier, you could say, okay, my top alpha % of my leaders will be I'm going to designate them as my leaders today. I'm going to see what they did today, and then I'm going to use that as the forecast for the laggards tomorrow. Okay, now in the finance literature, there's a quite broad literature in the core finance community, but all these lead-lag relationships are predetermined by economic heuristics. So, for example, they say that firms with large market cap lead firms with small market cap, or stocks that have high traded volume today, they lead stocks that have low volume, and so on. But these relationships are not data-driven, right? The economic heuristics, and there's reason to believe that we can get some mileage out of using more data-driven techniques to better understand the dynamics of order flow in these markets. Another question is, how do you build this directed graph? Yeah. So the go-to tool in the finance and the econometrics literature is using ground causality. Right? So it's a kind of linear regression test that kind of sees if the inclusion of lagged values of one series in the linear regression model significantly improve the fit. So if I, for example, I can forecast B better if I use B's past values and A past values, as opposed to just using B's past values alone. But this has a number of shortfalls, assumes a linear relationship between leaders and followers, and stationarity, which is a big problem in financial data. So in more ML statistics, previous works have used this cross-correlation function that we're going to use as well, as I'll show in the next slide. But we also introduced a method that's based on the signatures to handle nonlinearity in the data, and this works quite well. But one is free to plug in whatever techniques they want for detecting lead lag at the pairwise level, right? This is just a very noisy measurement that any techniques that could be used to build a network. But the question is, how do you denoise this and you compute some higher order relationships? So the pipeline that we kind of proposed in a series of works in the last few years is, let's first build a network, and the network could be, let me give some examples how you might construct the network. For example, you can look at the cross-correlation function between Apple and Google, and maybe entry ij will be plus 30 if that's a lag that maximizes the cross-correlation. You can maybe look at the area under the curve and you direct the edge based on which area is bigger, or you look at the second order signature of this two-time series that actually works best in the end. So just to unpack this a little bit, so think of I and J are Pepsi and Coke, T is time, and M is like how far back you look at. So this double integral here is essentially telling us that it's capturing the propensity with which a move in Google at time U is followed by a move by Pepsi at any time V larger than U, minus the propensity with which the opposite thing happens. So it's a kind of a nonlinear way to build this lead-lag relationship. And then we have a number of ways how we construct portfolios out of this, but maybe in the interest of time, let me just skip to the kind of a big picture idea. So we can, we explore like multiple ways. First, we use our digraph clustering techniques to get back clusters, and then we can compute pairwise imbalance between clusters. So remember this metaflow F matrix. And then using this, we can we can extract what are the most lagging clusters, and then build a portfolio out of that. We can use ranking techniques to, you give me the network, I use my favorite ranking algo to rank from leader to follower, and then I construct a portfolio for the followers using prediction coming from the leaders. Or we use these cluster rank techniques where we first find K clusters, and then within each cluster, we rank from leader to follower while creating few sets. And we've gotten, varying, levels of success. So the most, just to give the high level overview here is that signature-based methods perform best. And then doing something like a cluster rank technique gives the best results. So we're getting sharp ratios as high as, almost 3.5. So those of you who've seen this sort of metrics in the literature, they're quite high. So we were getting even like something like 8.9 basis points a day. So 1% of P&L return is 100 basis points. So those are quite high returns. But this statistics, for example, were over a very large period of time. And the problem is that in the last 10, 15 years, the profitability of the strategy is flat, as you can see here. So this motivated us to do some bit more work. So instead of relying on close-to-close returns, so typically when we work with time series data, financial returns, we look at price change from yesterday market close to today market close. So in a recent work, what we said, okay, let's construct these lead-lag networks, not by using close-to-close returns, but let's decompose the close-to-close return into the overnight return only. So this is yesterday close to today open, plus the daytime return, which is from open today to close tomorrow, to close today. And there've been, there's a rich literature that looked at the negative correlation between overnight and daytime. So if the stock, has a big high overnight return, you expect it to have a negative return on the daytime, and the other way around as well, though it's a bit weaker. So the idea here that we did, we wanted to kind of extrapolate from the single stock portfolio construction to this lead lag detection. So we use this maximum likelihood estimation algo to extract clusters from this networks that we built from this returns in intraday past overnight, and then we use the signal from the leaders to build laggers. Okay, and this long story short, we were able to get pretty good P&L results even for the last 10-15 years with quite high sharp ratios, which some of the existing methods were not able to. So this is over the 25-year period. Existing techniques were doing quite well overall, but if you look in the last 5 years, where our proposed techniques are kind of at the network level lead lag, they do quite a bit better. Okay, so just to summarize, hopefully I managed to convince you that spectral clustering and vector clustering are helpful for uncovering interesting structural information in networks, and they could be leveraged for some downstream task of interest, for example, lead lag detection or statistical arbitrage. Spectral methods are attractive because they're computationally scalable, especially if the matrix is sparse. You can just compute a few eigenvectors in almost linear time with the number of edges. They are amenable to theoretical guarantees. I've shown a few examples of this stochastic block models for the signed case, directed case, with some, providing some weak recovery guarantees, and they're also robust to high levels of noise in the data, as we've seen in some of these real-world applications. So the main takeaway is that in some of these financial applications, you're best off not to use just off-the-shelf generating clustering algo, but rather it pays off to customize to the task at hand. So some future and ongoing work on the methodology side, we're looking at how can we cluster these directed graphs with side information. This side information, for example, could be, the underlying meta graph. Remember this F matrix that can be a past graph, a cycle, or whatever. So in some cases, you may know the meta graph, and hopefully this should give you some side information to improve your estimation, or maybe you know the edges in the meta graph, like how many edges this meta graph has. We're also started looking at extension to the time-dependent setting. So here we assume maybe one of two things. Either we have a smoothly evolving measurement graph G. So this G sub t, the graph at time t, is a measurement graph that you see. But also you can also have that the cluster membership is changing. So under some type of Lipschitz type of assumptions that either the graph cannot change too much or the cluster membership can't change too much. You can't have too many nodes swapping nodes between two adjacent time points, for example. Then we're hoping to give recovery guarantees in this in the setting. So imagine that it could be the case that your measurement graph is so sparse that at any given time t, it's disconnected and you can't recover the clusterization, the solution, because the graph is disconnected. But if it's the case that maybe the union graph over some look-back window interval, maybe use some kernel to average out over some graphs that are proximal, nearby in time, and then you extract clusterization from this newly constructed matrix, then you can still, recover the clusters, even if each of the individual measurement matrix was sparse. And also, regularization in this very sparse regime for digraphs, I'm still not sure how to do this. So this is when you're sampling, when your probability is below log n over n. So think of something like theta of 1 over n. So typically for unsigned, unweighted graphs, people shift by the all ones matrix, or they shift the diagonal matrix by a square times identity. But in this case here, for the directed graph, this would not make sense because then we still construct the skew symmetric matrix. So that kind of doesn't make sense here. So still if you have any ideas of how this could be approached, what would be meaningful way to regularize this directed graph matrix, I would be interested. And then we have a few approaches on the finance side that we're working on at the moment, but maybe in the interest of time, I can stop here and take any questions if there are any.
Awesome. Let's thank the speaker by clicking buttons.